Okay, hey, good evening, everyone. Welcome to the Hurley Investments Market View Commentary for Monday, the 27th of June. If I was going to go over just a little bit of how to say it, so let's just put this. If I was going to go over market expectations are a rebound up to 4,100. Would be the short-term expectation till we end up hitting some resistance, right? And don't forget, market closed next Monday for 4th of July, which means to keep this into perspective, right? Which means we might have a sell-off like today. Everywhere else in the world, the market was up, right? But today we had a bit of a sell-off. And the reason why that sell-off occurred, big money closing the end of the quarter books. June's the end of the quarter. They're closing their books. It's not been a great June. So that would be my expectations for the week. We will probably be pretty flat. We might have a nice up day on Friday as it's big money's out of the market, really probably Thursday and Friday. So our sell-off risk would occur today, tomorrow, and Wednesday. After that, big money's out, and we have a Monday holiday, so I will most likely be pushing my Monday. Not most likely. Next Monday, we're going to change that to Tuesday so that we have our market open. We can go through our market at that time. Just to keep this in mind, there is still risk to the downside, and it wouldn't surprise me to see us test 3,000. And that's kind of a bold statement with the S&P sitting at 3,900 right now. But that would be the expectation, a double bottom, a bounce down there at 3,000 to retest it. We just need some more bad news, and believe me, there is tons out there. We're just oversold to the point that people are saying, hey, you know what? It's a deal. It's interesting because Hurley Investments right now is cash heavy due to collecting profits off of the long put protection. And we still have to add shares to certain stocks. So we haven't added some shares to certain stocks. We did so in March. We did a little bit here 3 weeks ago, but we haven't added shares to everything. And we have cash to do that. Jim's here. Jim, to let you know, we're now back positive on Lockheed Martin with that protection. We need to cash some of that in, but we're now back to the positive side from Lockheed Martin versus just letting it just run by itself. And we made up where we didn't have Lockheed Martin for you. That position's now been made up with the most recent downturn that Lockheed Martin's had from 460-ish down to the 400 and teens. which is what we're supposed to be doing in the first place. So I've had, I think it's 5 questions. And let me go over the 5 questions that you guys have been asking. Number 1, in fact, I'm going to go ahead and I'm going to put this in here. Number 1, how are you able to watch the markets when you have a family emergency, right? So there's a question. Hey, Kevin, you know, how are you able to do this? In fact, it was really neat. Some of you are like, hey, don't look at my stuff. You know, take a couple weeks off. Well, if I took a couple weeks off, the markets were down over 10% for those couple weeks off. And the first thing is, I have to, because my money is also in the market, and I can't just let it ride. So there's number 1, right? I really appreciate some of you saying, oh, you know, just let it go. Just, you're fine. Well, you know, it wouldn't have been fine and I'm going to go back to Jim, for Lockheed Martin. Lockheed Martin is down over 10% in the last 2 weeks, right? I've got to watch Apple on minute, Under Armour, Facebook, Disney, Ford, Visa, Bank of America, JP Morgan, all our core stocks I'm in as well. So it was, I'm not saying this way I want to. I'm always watching because I have a vested interest. The difference is I sleep the nights. I've just switched my sleeping schedule. I wake up and, well, how many times is this? I'm up all night. I don't sleep the nights. I'm up all night. I watch the market open. I get through what we call the East Coast lunch hour for Utah Mountain Standard Times between 10:30 and 11:30. And I'm really missing the last hour and a half that the market is open as I sleep. And I have Keith take care of that part. But the neat thing is, when you're in the stock market, and just something else just to let you guys know, if you are protected, you don't necessarily have to be watching every single minute, right? And that's something to understand that's helpful. Number 2, do you pay for help with how do I say this, with market stuff, right? And I'm going to say charting, newsletters, you know, etc. And what I'm going to tell everyone here is yes, but I am paying, so you don't have to, and you can do everything for free. In all honesty, guys, there is no newsletter that truly is going to help you out. There is no charting or subscription to something that's going to make the difference for you. Everything that you guys are looking at, I've already purchased. There really is nothing out there. It would surprise me if there's something out there that you guys are in that would be any benefit to you at all. The best 2 that are out there are Guerrilla Trades and Safe Option Strategies. And to be 100% honest with you, If you've already taken some education, you know just as much as they do. And there's nothing that's truly there that's going to help you trade your own money any better than you would just by looking at stuff that's out there. Because there's so much out there, where I get my information from is still pretty boring. I mean, it's briefing.com is where I'm checking for information about economic reports that run our futures. A lot of people are asking, well, Kevin, why was the market down today? Europe was up and Asia was up and everyone was up but the US today. And it was really interesting because we had 777s, right? We had 777s. We had, in poker, durable goods was up 0.7%. Durable goods ex transportation was up 0.7%. Pending home sales was up 0.7. 777s, it would be a heck of a poker hand, but it wasn't a hand that our markets wanted to see, right? Our markets were like, we're going down today. And people ask me, what is going on? Why are we down today? Well, I'm going to infer that because it's the last day of the quarter, this is why this is where we had what would typically be a rebalancing for the quarter that most likely happened today, because economic report wise, we should have been up. We should have been running with the rest of the markets, up another 2.5%. But remember, we did go up about 5.25% last week. So maybe our selling is becoming exhausted. But I go to briefing.com where I get my economic reports. I go to my charts where I get FinViz for free, where you can get stockcharts.com for free. When I say I purchase stuff, you know, I've purchased Y charts, I've purchased a ton of different things, but there's just not a whole lot out there that you can't get for free. So why pay for it? Do I get Stansberry and the hedge, zero hedge, and you know, all these weird things that come up? Yeah, I usually buy them all for a year, but I buy them all for a year to come back and tell you guys what a waste of money they were. What a waste of money they are. I mean, just to give you a general idea, if any of these educators, newsletter gurus, hey, I used to be on the floor of the stock market, blah, 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 blah. I'm even going to go so far as to say, you know, the Nigerian brothers, right? All this stuff that's out there that's supposed to make you a good trader, that you beat the market and do this and do that. If they were really doing that, they'd be doing it for Goldman Sachs and a whale and making billions of dollars. There's no educator, there's no market guru that is out there for the benefit of humanity giving information out for free because he's just doing it out of the goodness of his heart. That is the biggest crock of you know what that you've ever seen. So I don't pay for that stuff. I don't use that stuff. It's not helpful. It's just BS. What I do pay for is so I can see what it is, tell you what the differences are. So Lance, I know you found out the hard way. William is not here today, but William came back and found the hard way. Guys, if you have questions about some of the stuff that's out there, I purchase it so you can come and ask me, and so I can help you guys understand, hey, here's who's legit, here's who's not, and the fact of the matter is, give yourself some credit. If you've been through some education, the reality is you probably know just as much, if not more than they do. They just have a better marketing setup for you. Okay, number 3. How are you not losing your, let's just put it that way. So someone asked, and they're typing in right now. Sorry. So yes, the short answer, how are you not losing your bleep bleep bleep? And I'm just gonna put in parentheses, in today's market. And so the short answer is it is experience. And it really comes down to, for me personally, the 1987 crash, the 1993 crash, the 1996 through 7 crash, right? The 2000 crash, the 2003 bubble crash, the 2008. And what it really comes down to is the fact that I've been through these and came out much better on the other side. Please don't think that I don't wake up some days in the market and the first thing I do is, for me, I usually go crack open a Monster drink and go check on the cows. And don't think in walking to the fields, I'm not cussing and swearing every single minute as I walk over, as I'm bringing up the phone and I'm seeing futures and news. And it's just, yes, I get just as pissed off as you guys. To see Ford back down to $11 when it was at 27, it's BS. To see Under Armour at $9 when it was at 30, it's BS. Actually, when it was at 27, Ford was at 25.87 for its highs. I get ticked off about it. To see all the crap on Baidu from 380 all the way down to wherever the heck it was at here recently, 112 or whatever, it's garbage. Someone's manipulating it. Yes, it pisses me off. I just lose my bleep out with the cows in the field on the first thing in the morning, right? I lose it when I'm coming back from driving my daughter off at gymnastics at 6 o'clock, an hour and a half before the market opens. Yes, I get frustrated, but because I've gone through the process, really through 2008, so I go back down to, I could also say most recently 2020, 2010 was another little phantom, takeaway. Because I've been through these and I've made something on the way down, because I've added shares and I've come out on the other side, it's my experience that doesn't let me freak out and just dump things. But this is why I'm not maybe as emotional, or some of you have called me. That's why I'm available for you to call me. I mean, how often do you go call your broker and say, I just want to talk? It's pretty neat, because as I look at some of you that are here, in fact, let me just go through really quickly. Abraham, I've known since 2000, when I was a coach for an education, that still, Abraham can probably vouch for it. I called them on their BS and I told people how it was. Bill Brandner, Bill, I've been friends with you for, 2005 or 6, same thing. Jim Kohler, big help as I was frustrated with my kids, Russ, I've known you through Forever for Education. Maud, we've talked. Dave and David, we've talked in the past. I even just lost where I was going with that, but the short answer is that it's been a lot of fun to manage money, but to be available. So when you guys call, hopefully I'm an even keel to give you some benefit of not just dumping everything. I mean, look how many people dumped everything last week. and now the market's up another 5% and they're too scared to get in. Lance, at some point in time, I'm going to go over a portfolio review that I will anonymously publish, but to show people how ridiculous it is for people that are putting you into funds or their own self picks, and how you can lose 50% in a year, where part of that year was up. I mean, leaving in June to June, oh my gosh, everything sucks out there. Let's face it, everything sucks out there. And hopefully what I am trying to do is to not be part of that ridiculousness and give you guys an opportunity to make up something on the downside. I really have enjoyed this question. Can anyone do what you do? And the plain and simple answer is yes. Meaning, you guys that have had education, literally you can trade like I do. Those that are out there that are licensed, bonded, insured, they could be doing exactly what I do. And it's not hard. I mean, all I'm really doing is I'm looking at the charts, right? I'm looking at the charts, the main charts, and saying, okay, last week we were a little bearish. We could have gone down to 29, but we've had a bit of a rebound. Markets right now technically are still bearish, but they had a bullish rebound. Is it a dead cat bounce? I don't know. But June, wow, June we're at 3,300 down to 31. Pretty big crushing June in the Dow Jones Industrial Average. S&P, we are still bearish on the S&P 500. If you pull the chart out, you can take a look and you can say, hey, probably going to go down to 3,000. Probably going to give you the opportunity to probably going to give you the opportunity to have a double bottom before we really move forward. And again, this will probably come here in 3 or 4 weeks when we get another 75 basis point rate hike, and we're going to protect for that again. NASDAQ, awful, still bearish. But all I'm doing is looking at these things. Kevin, what about individual stocks? You're trading individual stocks. Yes, I conform to the Warren Buffett way of thinking, that I'm trying to get the best of the best fundamentally. It doesn't mean that they're going to trade that way, but yes, I look at Apple, I look at charts, I make my decisions to when I'm pulling things off using pivot points, the 50 and the 200-day simple moving average. I use the RSI MACD, and I've put the Williams percent R in because I've used it for forever. It's a medium statistics. It shows me where big money is putting their money, and it's a unique indicator of where the markets can go. I'm not doing anything special here other than I consume huge amounts of information. I don't do it through a newsletter. I don't do it through a screener. Huge amounts of information. I just read and read and read. And my brain is just a little weird. I sometimes wake up in the middle of the night. If I'm worried about Asia markets, I see their lunch. I watch the European markets open. I watch the Asian markets close. I'm up, and all my brain is doing is reading. I read huge amounts of information, and I'm just trying to put pieces together. In fact, I've got tons and tons of yellow Notebook pads, just the yellow papers. I buy them by the bulk of 25, and I'll go through probably there are 100 pages of 25 notebooks of 100 pages of just those yellow where you just turn the pages over. And I'm just writing stuff down where my brain's just trying to connect the dots between different things. And then I review my notes daily, weekly, monthly. And then by then, usually the information is old and I need new information. So I spend a huge amount of time just reading and reading thestreet.com. And I don't know, I read everything out there. I mean, a lot of stuff that's out there, I'm just reading to see if it makes sense. And people have asked, well, why don't you use some artificial intelligence? And I don't. And here's the last question. So I'm going to go ahead and put that there. Why don't you use artificial intelligence? And it's simple. Artificial, I can't spell. Artificial intelligence is stupid and past information. There's nothing that thinks. There's nothing about these algorithms or there's nothing out there that predicts the future. It just doesn't happen. Otherwise, we could just use charting every single time. I mean, artificial intelligence is just a program that gathers past information and tries to even out the lines. Artificial intelligence is an algorithm that doesn't understand we're looking for averages in a variable market. We're looking for consistencies in a variable market. We're looking for repeatable patterns in regards to weather and to political events and to presidents of nations and wars and famines and stupid management by CEOs. And people are trying to think that, hey, somehow artificial intelligence predicts that. And it's bullshit. It doesn't work. It's not true. It's not available out there to have something that predicts the future. So I don't use artificial intelligence because it's artificial. It's not real. I don't use algorithms because it's just a number that I can work myself. Todd actually just, in fact, Todd and Dave just asked the same question. Any validity to seasonality to predict? So there's some general trends, right? Selling may go away. If there's some weather patterns that might affect commodities, I mean, yes, but it's not pinpoint data, it's range data, right? So the short answer is, how well do you use range data, not pinpoint data, right? Predicting bottoms, tops, I mean, it's all in there. You've heard me a lot throughout the years talk about ranges, right? I think it's foolish to call tops and bottoms. I think it's foolish to pinpoint exact dates, times, pricing. That's a fool's game. It really is. There's another comment or question that's related to education, and let me put it this way. You are a fool. Now, that's not fair to say. It is foolish to always be protected on your stocks. I know an education that's been protected since 2008. Well, I'm always protected. That's foolish. We just ran through the biggest bull market in history. If you are always protected, you're not taking any risk in the market. If you're always protected, you're not using technical, fundamental, emotional, or you really could say sentimental analysis correctly. There are times you have to take risk and let things run. That's what technical analysis is for. If you're always protecting yourself, yes, you'll never run into a black swan type of event. But you also will never make any money because you're always protected. The numbers don't add up. You can't be always collar traded. You can't always be having short calls on. You can't always be having puts on. You're putting bearish positions on bullish moving stocks. It really contradicts the whole premise of fundamental education in the stock market. Fundamental analysis, technical analysis, sentimental analysis. It's throwing all those out the door. Good question, Russ. Let me push that for just a little bit. Big picture, early warning signs can start flashing again for another drop down. Really, it's going to come down to GDP numbers and more supply chain issues and higher costs of doing business. So keep that in mind. A good little information to go through and read. I'll have this posted for you tonight since I'm up all night and I've got nothing to do. Right now, the stock markets look like it's at a bargain. And because it's at a bargain, that's why people are buying back in. There are still some reasonable fears that can push us back down pretty quickly. I enjoyed the other market recap. Just general information, please read through it. This week we had Nike today, Bed Bath & Beyond, and GIS is General Mills. Walgreens, Boots Alliance, and Micron on Thursday. For those that have Micron, we will be putting puts back on. We're letting things run. Economic reports. Probably Wednesday will be our big down day before big money's out with the GDP. Expected to be a negative 1.5. Would not surprise me to see it worse than that. But if it is worse than that, the good news is we don't have a negative quarter. We're not going to have a negative quarter for GDP. So technically, we're not in a recession till maybe next quarter where we'll have a negative GDP number, but very unlikely we'll follow it up with a second quarter, which is the definition of a recession. A recession is 2 negative quarters of GDP. Kevin, how can you say that? I'm saying that because the American public is greedy. We're greedy and we're spendy. We'll spend money for kids during Christmas, whether we have the money or not. A question was asked, since you were selling off puts last week, when are they going to go back on? And so this kind of goes back down to that range question, right? The range question is, when are they going to go back on? And I'm going to say before the July FOMC rate hike meeting. But in all honesty, I'm not sure. Most likely, we're going to go through the beginning of July where we're still going to slowly be trending higher because we've been beat up so bad, right? June's been such a down month. we're going to start trending higher because everything is cheap. It'll be on lower volume. I do think the trigger to head back down and test the lows, which could be 3,000, which could be only going back and testing the 3,600 level, right? Really, it's going to be 3,586, but the 3,600 level, strong support at 3,200 on the S&P, super strong support at 3,000. I don't know when I'm going to be putting the puts back on, but if I start to see a flush out, puts go back onto everything. If they're starting to throw the water, the baby in the bathwater out, it's going to go out. If you don't know what I'm talking about here, all you have to do is just say, what's the FOMC meeting schedule for 2000 and what have you, and July 26th, 27th is our next rate hike meeting. So I am probably looking at the middle of July. We'll probably get through next week, and it's kind of like clockwork. July 11th through 15th, Monday through Friday, you're going to start seeing some news come out about, oh, we're going to do a rate hike, we're going to do this, we're going to do that. And that's when I will most likely get some puts back on. So not next week, but the week after. Going to let things run a little bit higher. And I'm going to get them on when we start getting news about rate hikes and people start to panic, and we're going to probably go down and test that bottom, get another 75 basis point rate hike, and watch the market kind of run back up from there. FederalReserve.gov is a great calendar and a great place to read about their thought processes. This is a great website, FederalReserve.gov, /monetary policy, FOMC calendars to see what their thought processes is. Obviously, Powell is trying to make up for the last two presidents' dovishness, way too dovish for Bernanke and for Yellen. He's got to go higher. He's got to control inflation. Totally putting the skids on economic growth, but don't be surprised next year if we get some rate cuts and they shave off a quarter point to kind of re-energize or restart the economy. So good question. That's my expectation right there. Going through, interesting, crypto hedge fund, the center of the crisis, face risks and have to repay, $670 million. Really, it's more than that. It's like $4 trillion that they're screwed. Way to go, cryptocurrency. It's a joke. I found an interesting article. I was trying to run the calculations myself, but this guy did it for me, and he's very close on everything. If we're looking for a second half rebound, here's the chart that you need to look at and what opportunity is possibly available when you have a big down first half of the month or first half of the year. So do read through this article and enjoy the chart. It's a great way to better understand why people were talking about, hey, probably the end of the year, probably this, probably that. We could have a pretty good rebound towards the end of the year, and most likely it'll be because of the elections and some gridlock. Any questions you guys have? Any questions that I can try to answer for you guys? I do appreciate all your concerns for my son. He is going to make it, but we still don't have him talking with a trach. We still don't know where he's at in his head. and we're hoping for the best, but we still will probably have 2 to 3 weeks till I can tell you, till I can give you a prospectus on how scrambled his eggs are in that noggin of his, and what we're going to do for sure. Kind of funny. Bill made a comment. How does Kathy Woods miss a cryptocurrency fall? She makes most of the others, doesn't she? Don't worry. She's lost her money in cryptocurrency as well. And yes, the short answer is, Kevin, why are so many people so positive about the market? It's because they're not in it. And yes, I'm picking on Kramer, and I'm picking on some of these people that aren't actively in it. They're making their money peddling the BS on live TV or through earning newsletters and stuff like that. They're not really in the market. They're not trading real money, which again, I appreciate it, guys, but the reality is a lot of you are like, oh, you need to take a couple weeks off. Your family's important. Da 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 da. True, but I can't take a couple weeks off, especially in this market when my money's in there as well. I'm doing the same thing you guys are doing. It's not fair to my other kids to say, hey, someone gets hurt, dad stops working. You got to pay the bills, right? So, who knows? Who knows? We just do what we can do there. Thank you. All right. Any other questions you guys have? I'm seeing a bunch coming through. Thank you, Bill. I like that I'm making you laugh. Any other questions you guys have that I can answer for you right now? So yes, I'm not sure, and I could be wrong. So Dave, good question. The answer is I'm not sure yet when I'm going to add those shares back in. I do know that for a lot of our positions that are down worse in the market, I'm going to add them in at a lower price than where we were in January. Let me just put it that way, right? So I will have a lower price than we were in January. I'm not able to make a decision at where I want to add shares because I am expecting another bottom, which means in July, before, during, or after the rate hike is when I'm probably adding or putting more money to work. I'm looking for a relative bottom that we've bounced off of before that I can find a way to put shares in when everyone else is selling is what I'm trying to do. So that's where we're at. Two good questions here. China seems to be doing better. Will it continue? So the answer there is yes, but they're not doing better. They're Chinese. What do I mean? Their government is doing what we did. They're printing money. They're manipulating their economy. They're sending stimulus. They can actually change and just make up numbers. China is doing what we did now to stimulate their economy and throwing money at things. We also have President Biden that's going to lift tariffs, and actually we've got the United States that's willing to help out China versus helping out ourselves right now. So yes, China should be doing better. It's manipulated right now. It's not off of real numbers or earnings or so forth. But again, if we take off some of the tariffs, we're only going to be helping Chinese companies in China. And that's why it's looking and doing significantly better. You asked, or is it just a head fake? I don't know, but right now our bullishness is probably a head fake. because nothing's changed in the last 2 weeks, and that's why I would expect to see us go down and test the bottom one more time. It would be nice if it would be 3,600, 3,589 on the S&P, but it's probably going to go down to 3,200 because earnings this next quarter won't be very good at all. So just something to expect. I like to see Baidu do better. Mod, so would I. Holy crap. I am totally over leveraged in Baidu to the tune of like 18% of my portfolio. But man, from Baidu, we ran from 3.8 all the way down to like 250, made every penny on the way down. That's not true. It was like from 350 down to 250. We made every penny on the way down. From 250 to 200 on the Baidu price, we only made like 25% on the way down. 20%, 11, 13 bucks, not doing very good. From 200 all the way down to where we're at, net with the ups and downs, we've made more money than Baidu's lost from that point. But yes, Baidu's a huge opportunity. And a lot of people say, well, Kevin, why are you in Baidu? Baidu is the best Chinese index that's out there because they own IQ and Tencent and AI for the country. They own 30% of Baba. It's a great, huge company that has their fingers in all the pies that are out there for China. And it's the only Chinese stock index I would trade because of past history and experience. I've made more money on Baidu than I have on any other individual stock, including Apple, including Facebook. Baidu has by far been Hurley Investments' biggest breadwinner throughout the years, going all the way back to 2003 when I truly started money management and going from there. All right, any other questions you guys have? If not, thank you for having me here tonight. I'm going to run, got to get a shower in, got to get back to the hospital. I'll get this posted tonight. I'm up all night. If you're bored, text me and I will answer you at all hours of the night. And thanks. All right, guys. Hey, have a great night. We are looking forward to a better second half of the year, which may not even start till November. I will get this posted so you can read the articles. Guys, appreciate all your support. Thank you very much. I hope tonight was helpful in answering questions. And that's it. Guys, I'll see you next Tuesday. We'll be canceling Monday because of 4th of July. And understand Thursday, Friday, probably not much going on because you have the holiday of the 4th on Monday. So really, if you want to, after Wednesday, put the market aside, enjoy like a 6-day vacation. Have a good one, guys. Talk to you later. Bye-bye.